Asia is under pressure today, but US futures look more so. I mean, there's the earnings story there. There's the debt ceiling and what that does to the credit impulse, perhaps even in the United States. And then there's facts around the credit impulse coming through from the Beige book. What are you thinking is driving sentiment as we get closer to the US session?
So all those factors you say are real and valid. There's the debt ceiling concern. Earnings, actually, I think have been overall a slightly positive story. And as you say, there was the Beige book story. But again, while there's warnings from Williams, which is quite important about a kind of a credit slowdown, generally the Beige book was mixed to maybe not as bad as some people feared. So I think actually the short-term price action is not necessarily connected to those fundamental drivers. And I guess what I'm saying is I wouldn't read too much into the short-term price action. You know, we've not had big moves either today or any particular day over the last few weeks. And what we've seen is kind of trends very slowly going one direction. And really the last 24 hours is a bit of a counter-trend consolidation. Not a particularly wild move, but I don't think it's a turn-in trend yet. And I wouldn't read too much into that short-term price action. Some people might respond, maybe it's just because I'm bullish and therefore I'm ignoring the slight risk aversion today, but I don't think that's the case.
OK, good to get your thoughts on that subject. I mean, we're seeing trends and counter-trends when it comes to the global inflation narrative as well, aren't we, Mark? Because yesterday we got all excited about that inflation print out of the UK, higher, more sticky than had been anticipated, higher than expected. The New Zealand inflation print then, as today's submission into this particular set of data, comes in weaker than had been expected. What's your latest thinking on where we are there?
Well, I think this is interesting because for a long period of time, we almost only got inflation surprises on the upside. And now we're in a world where we're getting both beats and misses. And therefore, you're getting a bit more of a divergent story in kind of global markets. So the macro trading environment has changed. From late 2021 through to about September 2022, it was just easy to trade. There was just very clear theme. The world was completely behind on the inflation story, on the yield story, and you just kind of traded that and the implications of it, both in FX and equity markets. What's happened since then is we've become a much more differentiating market. It's much harder, but it's a very pure macro market, and you no longer need to go, inflation's going to beat everywhere. I remember a year ago, you'd asked me, Anna, what I thought for a central bank meeting. And if I hadn't done my research or didn't have a clue, I always just said they'll do more than everyone expects. And it was always right.
Yeah.
That is no longer the case. You can no longer be stupid and uninformed like me. You need to know your stuff and differentiate between the countries' different trends. So New Zealand here missed. Sterling came higher yesterday. And I think those kind of divergences are going to become more important over the next couple of months.